Good evening and welcome back to Be Rich. Shashwat is not well, so I decided to take turns. And yesterday I spoke myself. My brother was also not there. But today it is my turn to do it with my brother today. And so he's come up with one of the guys who I follow, Michael Burry. And if you do not know who is Michael Burry, if you watched that movie on the Michael Lewis book of the 2008 crisis, you will know who is Michael Burry. He's the guy who shorted the market in 2008, and he featured in Michael Lewis's book. And he had a hedge funds called Scion Capital, where a lot of pressure was put on him to call his shots, to close his shots.
Correct.
In fact, he was the first one to get a product like credit default swaps,
Correct.
and he kept on buying them and buying as the housing market rose. And then finally, the market turned and he made a huge killing. He returned all the money to the members of this hedge fund, and he now manages his own money. He is recently in the news, and so let's wait for Vinod to talk about the movie and the news.
Movie, I'm sure everybody's seen. The news is
What is the movie?
it's him shorting. Basically,
Big Shot.
yeah, he was able
So
to.
you must see the movie Big Shot.
I'm sure they've seen it.
Hmm.
Being fans of yours, this is not the first time we're talking about him. The reason why we're talking about him today is he seems to have changed his market positions dramatically in the last quarter. He seems to be buying huge bets against S&P 500 and Nasdaq 100, and his stock portfolio has also completely changed. He sold off all his banks, and he's moved all his funds into very defensive stocks such as shipping, capital, mining. He's gotten rid of all his Alibaba holdings also, and seems to be changing his complete strategy right now. Even all the American banks he had, all the shares he has sold them off, including Capital One, First Republic, PacWest, Bancorp, Wells Fargo, Western Alliance. He's gotten rid of all of that. So he's moving into position. Seems to be he's really leaning hard on this bubble bursting anytime soon now.
I do not know whether there's a bubble, but I know for sure that the market ran ahead of itself at this point of time in the US and in India. The entire US market premise was because of excess liquidity. The Fed does not yet contain liquidity
No.
till the way they should have done it. And they have now said every deposit is insured. So, to basically protect the banks, that means they have said they will give unlimited liquidity in the market,
Yes.
and they have not reduced the bond portfolio to the level they promised they would. The market punch bowl is not fully removed. There is punch bowl at higher cost,
Correct.
and therefore the market believed that this soft landing has been achieved, and that there is no going to be no recession, and it's all okay. And then this news about AI meant that the chips went
Yes.
flying through the roof.
There's a
The
knee-jerk reaction in hiring also in AI.
Yeah.
The AI salaries for AI jobs have shot through the ceiling. Recruitment for AI-related jobs has shot through the ceiling. There seems to be a knee-jerk reaction to this AI.
Anyway, then so this has really gone through. The markets reversed. They were at 1.20% down, and they almost came up to their all-time high levels. In India, they crossed the all-time high levels. And when all this happened, the inflation dropped. But two things have changed this scenario. One is in the last month, inflation in US actually went up,
Yes.
and core inflation went up by 0.5.
Yes.
So this clearly means that we are not done with the rate tightening cycle.
No.
There may be a skip next time, but there will be another at least one interest rate hike. And I believe even after that one interest rate hike, they may have to hike it once more and take these rates to 6 to 6.25%. And unless that happens, I don't think America is going to break the back of this inflation.
No.
And even if they stopped increasing interest rates after one or two hikes, they are not going to cut rates the next day.
No.
So the rate cuts will not come in the first 6 months of the year, and may go up to September, because the Fed's credibility is on the line. And if this happens, then US stocks have to fall. They have been falling for the last 2 weeks. They fell yesterday night. Consequently, the Indian market also fell in the beginning.
True.
So it clearly says that he believes this market is overvalued. he believes that inflation is not going anywhere, and he believes there's too much liquidity in the system.
Yes.
Okay. It could happen that the Fed over tightens. That's what most people are afraid of,
Yes.
because monetary policy operates with a lag.
Correct.
So if it over tightens, there is going to be a recession.
Correct.
Now, Michael Burry feels the Fed has to push the American economy into a recession. And therefore, he believes that these prices are not justified. And therefore, he has shorted the market, both the S&P and the Nasdaq. He's been constantly arguing against a lot of this money going into ETF, exchange traded funds,
Correct.
where the tops at the same valuation at the weightage at which the S&P 500 is built. So he says there's been a one-sided move into exchange traded funds and into certain select stocks. So when the stampede happens in the opposite direction, these stocks will reverse and the S&P 500 will fall.
Correct.
So it's a twin bet, in my opinion. One is a general bet that the economy itself is not going to recover, is going to go into recession, that the Fed will force them into recession. And the second, when the stampede happens, it is going to be the exchange traded funds which are going to hurt the most. And he's been warning about this for quite some time. So he believes we are at either the peak or somewhere near the peak, and a big correction is underway. A 20% correction would give him a huge profit on the positions he is holding.
Correct.
In fact, some say more than 90% of his holding is in shorts.
Yes.
We do not know, but this is what it looks like. So these are the two reasons why he has gone short. And definitely, these positions were a month old. And if he's still holding the shorts from there, he's already sitting on a decent profit.
And the article further says, even something known as the Buffett indicator, which is total market capitalization by gross domestic product, which means it's greater than 100, that means the market is considerably overvalued.
Yes, that is, if your market cap
Yes.
is bigger than your GDP,
Yes.
then you are definitely in trouble.
Yeah.
That indicator we have also there.
Yes.
So overall, the market is, I believe the markets have run ahead of themselves.
Correct.
They have to go through a period of consolidation and correction.
Correct.
So that's what he believes also. And he believes that the market will fall more sharply than what most people expect.
Correct. Because for a very prolonged time, according to the graph, the indicator graph, the last time it corrected below the 100% mark was during the financial crisis of 2008.
Yes.
Then after there's been a long, prolonged bull run thanks to Fed artificially pumping money in and not allowing the market to regulate itself, artificially regulating the market and tinkering with the market.
See, the problem is we believe that there can be no recession.
Correct.
And the central bank can do wonders.
Correct.
It cannot, and it will hurt.
Yes. So that's the same thing even Buffett seems to be believing, that yes, you can bet on America. America, you can never bet against the dollar, mighty dollar.
I
That's the
agree
reserve.
all that.
Yes.
But he is talking about a short-term trade over the next 18 months, while Buffett is talking about a
Long term.
Long
No, that's
term,
what I'm trying to
50-year
say.
vision.
Even short term, like what Barry says, but even long term investors like Buffett do feel we are.
this market is overvalued.
Yeah.
Shashwat did tell me that he is sitting on more than $140 billion in cash,
Waiting for the.
waiting for the correction to come.
Correct.
So that's a key indicator for you.
Yes. And considering the fact, even when the last correction happened, he didn't change his positions and he's still holding on to cash.
He did buy some,
Yeah.
and before he could really buy, the market took off. So he shifted his attention to Japan.
Correct. So there is what you call prudent to wait if you're sitting on cash.
If you are regularly buying small amounts of money, it is time to buy small amounts at pockets of the market.
Okay.
But if you are going to sink all your money into the market, investable surplus, then it means it's way better to wait.
So if you have, let's say, sitting in the US or in Canada and you have a surplus of cash, a small war chest you've been keeping, it's better to invest in T-bills and sit?
At this point of time, yes.
Okay. So there you guys have
And continuing to sip the stock.
it. Sip on these stocks.
Yes.
Okay. And would you suggest on staying more on aggressive stocks like IT or would you say defensive?
Very defensive.
Play defensive.
Yeah.
So there you guys have it.
Thank you for watching BeRich. If you like this content, hit the like button of the video, subscribe to our channel and turn on the bell notification. If you have done all this, Kindly show this video to your friends and relatives and have them take a look. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.